8:30 Thursday morning, preparing for the New York session. First thing I wanted to do was to take into account the fundamental movement that happened yesterday after the FOMC rate cuts. Gold pushed up, leaving the late 4190s, moving into 4238, leaving the 30-minute time frame, going to the daily. You'll see that this push up, it allowed Wednesday to break Tuesday's high. And as soon as Thursday opened, it created a new high. So price temporarily breaks out of this range area that we have here, really around like right here. We have so many wick interactions. You know, we broke above it, we came back into it, broke above it, came back into it. So we have a lot of interaction with this area at the top, and then at the bottom, you know, same, we're closing on it. Wick's a little bit below, but I like this closure here because of the little doji interaction that we have on it, and how when we broke below, we came back and wicked right there in this area. So I like that. I like this as being our H4 range that we're trying to break out of, and these are just some of the H4 high points that we're also trying to get past. Back to the M30 time frame, we see that after gold created those new daily highs, price tanked, bringing us back into that consolidation area. And you see on the H4, we're right at the top of it. With all the nighttime movement, gold created a large Asian session range, as you can see in the shadow area. Usually before I start trading, I mark off what my Asian range is. I typically move the range to a little bit before, just so you don't miss any wick action like over here to the left. And then I have a template for my Asian range. So pre-New York, while I'm prepping for my trading session, I see that throughout London session, gold basically ranged at the top of this consolidation area. Between 8:30 and 9 o'clock, I noticed this hourly candle. I really did like the bottom wick because it gives sellers exhaustion. Buyers were able to push up price from the bottom of the Asian lows down here. We also have a top wick that's higher than the previous candle, which had no top wick. So that was another sign that this candle here would give us a top wick. The lows broke the prior low. I still like the rejections coming up from this Asian range. At 9 a.m., we get a new H4 candle, but let's quickly analyze the one that just closed, this candle here. The candle body is small. It's weak, but it's bullish. What I do like is the wick movement. Okay, we get a low that respects the prior candle's low, but we get a high that breaks past the prior candle high, which is a buy signal. So let's mark off this high point here on the H4 time frame because we definitely want to see the new candle break that high. What's interesting about this area is that if you go on the weekly, that area is the weekly engulfing point, and we also have a weekly continuation pattern. So we will expect to be going past the weekly engulfing point. Now let's mark off this weekly point. So for the next H4 candle, we want to see it break the prior H4 high, and that happens almost immediately. When the candle opens, you drop down to the M5 time frame and you see that it creates a bottom wick, flips back bullish, breaks the prior high, and then you start to get a big push, and it happens within the first like 35 minutes of the candle where it pushes over 200 pips. And then it starts to tank back down as we close out the hour. Switching back to the hour time frame, we see this huge rejection wick. It retraced more than 50% of that hour's movement. So I don't like it a lot, But I do like the fact that the high was broken from the prior high. We even tested these wicks over here to the left side, breaking just one of them, but not too bad. The low was also respected, and it looks like we had a break and retest of that consolidation area. What I also like is that when you go down on the M30 time frame, you see that us coming down was really price creating a bullish continuation pattern in the middle of the Asian range. Usually, speaking for New York session price movement, if price is already in the middle of Asian range, after rejecting the low of Asian range, we get this continuation pattern that says we have a probability of going to the high of the range. Don't be scared if after we have this continuation pattern, the next candle, if it breaks this low. Because if you look back on past price movement with gold continuation patterns, you'll see that the next candle after the continuation pattern will break the low, and then it will come back and it will fill in for the continuation movement. Nothing is 100%. However, I have studied this type of candlestick pattern on gold before, enough to spot it in real time. So once the M30 started pushing low, I dropped down to a lower time frame, the M5, to see if an entry was presenting itself or if it was the start of maybe a larger pullback, since we were coming off of like H4 resistance. What I noticed was that M5 was showing convergence signs. It's similar to divergence, where there's an inconsistency between the main chart and the RSI. This is like my favorite type of entry. Usually when I see this, I wait until we get an engulfing pattern, and then that's actually when I start thinking about buys, right at this yellow area after the green engulfing. I'll wait till the next candle opens to see if we get like a retracement of that candle. I don't want it to break the low, but it definitely has to break the high. So here we are, we get the next candle. And as soon as this candle goes down and makes a little wick and it breaks above the high, I think that's a good entry area. My stop loss would be under the last M5 candle. However, I think that's really tight for gold. I would much prefer if the stop loss was around 42.17, because that area is below the last low on the hourly time frame. And if we were to break below that low, then that's more significant for me than to break the M5 low. Okay, so coming back to the M5 time frame, our TP for the buy move would be the top of the Asian range. We want to break past that area by 42, 47, 48. And then the second TP would be the weekly high point from last week, around 42.64. So that would be our second TP, 42.64. And then the first TP would have been over here by 42.48. And then from there, gold takes off. When it gets into this area around like 42, 55, 53, gold started playing around that Asian high, and I exited my trade. And in typical gold fashion, it continued pushing up, breaking the past week's high, and really giving us a nice completion to that weekly continuation pattern. Those were good buys up coming out of this consolidation area. These are the trades that I took. Hope you caught some pips too. The first three I took in this area here. Late London, early pre-New York session. And my stop loss was below this low here. And when we didn't break over here, I felt really good about it. As price pushed up and we got into this area here where I explained that M30 continuation pattern, that's when I got the last 2 trades. And I wrote up all 5 trades to this area here, 42.53, bringing my total pip count for this move a total of 1,680. After patiently waiting to get out of this consolidation area, I hope you guys caught some pips on this gold buy as well. If you like the breakdown, feel free to like, share, and subscribe, and I'll be sharing more technical analysis with you guys.